Welcome to Weekend Wisdom. Today, we're going to discuss strategies to take before the next crash. So grab your cup of coffee, sit back, and let's get started. So here we are, all-time highs. I look back at these charts. They look wonderful, right? Everybody has been making money this year. But one thing we know about the markets are, they are unpredictable. They are also cyclical. When you look at this cycle here, this is going back to 88. You go up, you go down, you go up, you go down, and we've been straight up. So what's next? Well, not sure when, but if you look at the cycles, we are due or overdue for another. Why? This is the second longest run-up in history. So today, we're going to talk about a few different strategies to hopefully prepare you for that next downturn. Tip number one, raise cash and rebalance to your original allocation. If you follow our weekly video, last week, that's exactly what we did. We went from 5 to 10% in cash, depending on the portfolio, and we rebalanced back to that original 60-40. Why? Well, if you have a 60-40 portfolio, 60 equity, 40 in bonds, markets are up, bonds are down, you're going to have a higher allocation in equities, therefore higher risk. So we want to rebalance, and we raise cash for risk and also possibly opportunity as we head into the last quarter. Next tip, sell those dogs. Not those dogs. Sell the dogs in your portfolio. Now, chances are there's not a lot of them, but we have had some rough sectors, and that tip you got at a cocktail party has not really panned out very well. So when you look at a chart like this, here's oil, right? Obviously, we had all-time highs, and it's gone straight down. When do you want to sell? At the bottom? No. But that is what most individuals do. They hold. They hold for hope, and we're going to talk about that in a second. The next one is take profits in some of your big winners. Well, here, there has been a lot. An example, look at the NASDAQ. From our low, 422%. From our last reasonable correction in 2015, we're up 55. So I'm not saying today, but have that process in place, which we're going to talk about when to sell and when to lock in some of those profits. Next tip, set up some stop losses at recent support levels. So how do you do that? Well, one of the methods that we use is called the Fibonacci retracement. Not going to get into that, but below, of course, we'll have a link on what it means. But Fibonacci was a mathematician. So the Fibonacci, that is tough to say. The Fibonacci retracement, the first level's 38.2, and here I'm showing you an S&P daily chart. That would put us at 2374. 50%, which is common, 2319, and a 61.8% would be 2264. So your stops would go into that area. Here's the S&P weekly, and here I go back to our last crash, and the 38.2 is 2000, 50%, which I think is very reasonable. Not today, but at some point, 1832. And then our 61.8 at 1665. So have a process in place of when to sell. Next tip, stop watching those talking heads. Not me, of course. I mean TV, right? They all have an opinion. They all have something to sell. And one day they're this, one day they're that. I mean, why? Here's a good reason why.
Business, and he's nuts. They're nuts. They know nothing.
Kramer.
Ah, yes, that is a classic, isn't it? So next one, take out the emotions of investing. And that's the tough part. We talked about when do you sell emotionally. You're tied to that stock. It's very difficult sometimes to sell. Just this week, we had another psychologist win a Nobel Prize, economist Richard Thaler. Okay, he is one of the founders of what's called behavioral science. Okay, another person that's won that is Dr. Daniel Kahneman from Princeton. Again, information below and articles on that. So get the emotions out of your process. Next tip, realize you cannot time the market. Okay, if this has been figured out, there wouldn't be markets because you could buy and sell and know when to make money. The most important one is have a process in place before the next downturn. We do. We've got two of them. If you follow our weekly video, we've got our signal, short-term, mid-term, long-term. Our most recent short-term went positive September the 10th, right? Happened to be a good call. Another thing we look at are the moving averages. I always talk about the moving averages in our video. And I always say, let's take away the noise. So here's going back 99 to 04. You've got your 20, 30, 40, 50-day moving average and the 200. Well, when you look at the first set, that's about a 10% loss. Most clients say they can handle that. But then when the 50 goes across the 200, that is a definitive signal. That's your death cross, and you can see the losses after that. Is that unusual? No. Look, side by side, top and bottom, however Michelle puts this on here, 07, 09, identical, right? When you look at that 20 going across, that first set is about 12% in losses. And when we get that death cross, whoo, it continues to grow. Now here, I have the same chart on 07, 09, but I add the S&P, so you can see the correlation, moving averages and going down, and then the market coming back. So hopefully today's video helped you. This is a great opportunity to learn and apply some strategies before the next correction. Why? Because we know it's coming. So, as always, we appreciate your time. If we could be of assistance, give us a call, email. Below is my calendar. You can schedule an appointment. Otherwise, we hope to see you soon. Thank you so much. Michael Loftus, Wealth and Wisdom TV.